Good afternoon, everybody. This is Dan Hussey with LAWaveForecast.com, bringing you our London session recap for our trading room, live trading room webinar. It is November 13th, 2013, 10:50 a.m. Central Standard Time. That's 11:50 a.m. In New York. And let's begin with the S&P 500. Today we are looking, and we had bids in at the 1754s. That was a two-tick front run of the 1753 halves. This is a full halfway back long off of our 1736 half swing low to the 1770 highs. No fill, unfortunately for us. It came one tick away. Then rallied into the gap fill, which is where we would have taken parts of the position off anyway, and then upside targets are at the 1778s. We've now broken 6-2-8 lines of any short off the high, so from a 15-minute and a micro time frame, let's go down to the micro, we are looking for a full halfway back long to trade now in an ambush setup for today. There was also already a long that traded to its target, so next in the series here is technically holding here at 1762, so that could take us higher in the near term, but 1759 half support going into the rest of the day for continuation of this rally higher. Dollar yen, we were watching the extension drawn from a 98.93 anchor to highs here. There it is. This level traded this morning. We got in. We used the original setup. We took half off on our push up into the 99.60. 99.60s that printed. Trailed our stop up to a 99.30, which we just got stopped out of, which is good because it looks like the 99.20s would have gotten stopped anyway. So that trade is now done and over with. Next in the series short here is a 99.40. Drop full shorts off the high as well. Unfortunately, it looks like the dollar yen may pull back into a 99 or 98.70 now, which is the full halfway back long off of its prior swing low. This swing would then take us up to a 130 level, but unfortunately, it looks like potentially more downside here in the near term before anything else, before continued upside. Doesn't mean we can't rally and continue higher, but it definitely looks like we're going to pull back a little bit here before we head higher, which I don't like the fact. I would not like to see us go below yesterday's low. That level to me is technically significant. So we'll see. Could head higher from here, but I don't have any great technical levels or support down here that we're at now. 98.940 was the support level I wanted to see hold, and now we're back just inside of our range. So it brings us to into the thought process that a 98.70 could be in the works here. Kind of interesting to see our euro yen actually holding its extension long very well. This is extensions drawn from the 132.60 anchor to high. It's the second time this extension's traded. Going out to 4-hour chart, we're still watching the next swing from the 131.50 that got a second test to take us up into much larger targets, and of course we're still looking for even larger targets up to 137.50, 137.40 area. So again, from 15-minute time frame, this looks like our support has traded and could be taking us higher here in the near term in the euro yen. Aussie yen continuing to the downside. Hourly time frame, we've traded multiple shorts here. Again, for stepping out to a 4-hour chart, this market really needs to trade down into 91s before probably any significant rally higher. I will say though that there was an interesting extension, same anchor new highs that exists at 92s, but going back down to our 15-minute chart, shorts are still clearly in control on multiple time frames, so definitely not a time to be a buyer of the Aussie yen yet, but seeing downside targets to 92.20s in the near term and the 92 figure, so should get down there. It's a matter of time when. Talk about gold here. Gold is trading the same anchor new low, 15-minute trend. It traded this whole week. Once, twice, three times. Now a fourth time it's run into the 1278 resistance. Along off the lows at 1270 seems to be getting support as well. Just keep in mind, everybody, we are in larger technical shorts here, 4-hour time frame. 143 or 1434 anchor to the 1250 lows here. We're still in that short with downside targets at 1207s. There's a valid full halfway back short drawn from the 1361s to lows here. So we're looking for 1310 resistance above 1280s, but the downside definitely remains in pressure. And I've been saying this all week. It's just not the time to buy gold yet. Wait for confirmations and reversals of trends if you're hell bent on being a long. But honestly, shorts are like we've been saying. Shorts are completely in control here, and we don't want anybody to get caught on the wrong side of a market. British pound. Yesterday we failed out of the extension short, and the market has pulled longs. We are running into full shorts here off of this prior, swing high to low. Now the full short resides down here. Resides at these levels, this 160.60 level, but at this time, going down to a 15-minute chart, we are holding longs off of lows. Particularly today, we did a Globex long drawn from the 158.80s to highs here. That trade has hit targets. Next in the series would be a 59.40 low to high here, and of course, always valid the full halfway back long. So we have a 59.90 support, 59.50 support on the pound to take us up and into the 160.60s in the near term. This is all, of course, inside of this larger 4-hour extension long that is holding support, the 59.10s, and has 164 upside targets. So in the near term, we're kind of just looking for support for the pound. The euro US dollar is also trading an interesting level. We traded full halfway back long here at the 133.40s. I'm less interested in the longs as much as I am in this extension short that's now traded at the 34.75s and getting a reaction now. From fib extensions here, we've traded the equal legs to the tick for the euro. So if we are going to head lower, this is the level for the euro. Excuse me. And I'm a buyer on a break above 35.20s. I'll buy the dip full halfway back. Can't ignore the fact that we have traded this full halfway back long. The big daily or 4-hour pullback into the 133s, but the euro is still holding the 34.70 resistance area that we've talked about over the last few days. So it's definitely not a flat-out buy yet. This looks very corrective off the lows, so there very well could be a push lower and give us an even better opportunity to buy the euro in the near term. So we're just waiting patiently for the euro to kind of tell us what to do in terms of breaking its trends. It's been very choppy and sideways up off these lows, and I'm not ready to commit my money to the euro US dollar because there's been so much sideways price action and so much lack of direction in the US dollar in general that I see the market being driven by other factors at this time. And one of those factors is the euro Aussie. I'd much rather be long the euro Aussie than the euro US dollar at this time. You can see this is very trending. This is a very nice reversal off of major daily levels. Remember, stepping out to the daily now, we're looking at a market coming up off of an ambush reversal long, broke out into extensions here, and the 141s have been our support level that we were watching. Traded, gave great reversal setups, and it's been bullish and traded longs ever since. And now we're holding extensions, or traditional today inside of extensions. It's not a level I would normally take or put money to work at, but I'll be damned if this isn't a bullish trend. So I am a buyer at a full pullback in the 42.70s, but for now, I'm on my hands waiting for the trend to kind of exhaust this leg up and need that bigger pullback. which we'll see if that happens in the coming week or so. And last but not least, the Aussie US dollar. So we've run into the full halfway back here at the 93s. My issue is, we are holding the extension, we've broken it, and now we've got a 93.50 resistance or a 93 support. I will probably look to be a buyer at the 93s if we get that a dip down into there. This is the ambush reversal that could trade off of these lows. We've got 3 legs down. They're not equal legs. Equal legs would put us down into the 92 region, but it is 3 legs down. And so long as we trade back down into the 93s before the 93.40s, I'm a buyer in the Aussie US dollar, looking for potentially positioning on this 93 entry for a swing, to up into parity from our larger time frame, kind of daily full pullback we've got here. Stepping further back on this chart, the full short on the Aussie from this 108 to lows comes in right there at parity. So I think it's going to be very natural for this market to head up into that area. I do want to point out that full halfway back short for the year, however, for the Aussie has traded just like gold. So it's kind of interesting to see that kind of correlation. I mean, it's expected in a commodity currency like this, but I got to trade everything, the two markets independently, even though there is that correlation between their setups at this time. So keeping that in mind, in the bearishness of the Aussie US dollar, I definitely see the potential for a long down here. Just a little worrisome, but hey, it's worth a shot for what is really could be either 10 to 30 pips risk, depending on where we'll put our stop, for a somewhat substantial upside swing at the very least for 100 pips higher into the 93.50s, right? Or 93, 94 or 94 area. So keeping that kind of in the back of our heads here. So that wraps everything up today. We have bullish divergence on the S&P still. Bank is rallying. The bullish divergence just means the prior high in the tick, we went higher than it, which means we're going to start squeezing the shorts here. But that's all I've got for you guys today. Going to be kind of now step back, reassess, and definitely let the market tell us what to do. And that hasn't happened yet. So have a great day, everybody, and we'll be back with you as price action develops.